Rajeev Thakkar, CIO with PPFAS Mutual Funds. I mean, this entire mutual fund, we've had the pleasure of tracking it for years, and what an extraordinary success story it's been. Started with a 150 crore corpus. Now, how much are you managing? 25,000 crore, right?
38,000 across the four schemes. Flexi cap is around 33,000.
Wow, isn't that incredible? I mean, that's what India is, right? You do something differently and keep on doing it again and again with a simple thought process, you'll hit a home run. So congratulations on that. So what are we starting with? Are we starting with Buffett? Are we starting with your own success story, or are we starting with where are you finding value in this market?
Anything except our story. We are here to talk about the markets. People are interested in the investment environment.
Let's start with the last one then. Where are you finding value in this market? Where are you finding value in this market? That is a very simple question.
Banking sector, I think. Probably I can combine Buffett and this question together, because there was quite a bit of discussion on banking stocks as well in the Berkshire meeting. So right now in India, we are in a period where banks have cleaned up their balance sheets. All the earlier corporate credit losses were cleaned up. Then COVID provisions and people have come out of COVID quite well. So today they are sitting on clean balance sheets. The market share shift from PSUs to private sector continues. Given that interest rates are higher, the CASA rates are, CASA benefit is coming in where these spreads can be higher. And we don't have the problems like excessive lending to commercial real estate or problems in terms of huge amount of bond losses and things like that. So I think in India, banks are quite well placed. I would think that they are trading at multi-year low valuation multiples. That is a space that we are quite excited about. There was quite a bit of discussion on the banking sector in the US as well. And a very interesting point which came out, and which at least to my mind I was not aware of, was that if the law had not changed, Berkshire would not have entered insurance and would instead have put all the money in the banking space, and they would be among the biggest banking sector owners today in the US. And they clearly mentioned that banking can be a very attractive business to invest in if it's run sensibly and if people don't do any esoteric stuff and risky stuff. So that was quite interesting to me over the weekend.
Oh yeah, it was, and very categorical mention that banks should remain banks and not get into consulting banking. Or rather investment banking. But Rajeev, the other thing that really stood out over the weekend at the AGM was also their opinion on AI, right? And, Warren Buffett categorically saying that if AI can tell me what stocks to buy, then I would acknowledge its presence. That really was a big takeaway.
So, amazing, Aisha. The kind of tinkering around that these people are doing at their age. So the most interesting thing that stood out for me about Buffett and Munger talking about AI was Buffett said that Bill Gates had given him some tools to play around with and to explore what the technology can do and cannot do. And that to my mind was amazing, given that Buffett has this reputation of being someone who does not know how to use technology and stuff. The interesting point that came out in that conversation, and it was almost a debate between Munger and Buffett, where they had a little bit of divergence in opinion. Munger was advocating being prepared for lower returns because of all these developments, whereas Buffett said that with all the technological developments, with data available very easily and things like that, still the focus is shifting to the very short end of the spectrum. Everyone is wanting to know what will happen in 1 quarter or 6 months or 1 year. And that actually creates more opportunities for people who have somewhat of a longer term thinking.
Rajeev, hi there. And, just to take stock of some of the other comments as well made, Warren Buffett sticking to his age-old advice about index funds being a great investment opportunity, and also talking about how there's going to be a time of correction in excessively valued companies. If you could just, elaborate a little bit more as to what your thoughts are on that, because we still continue to get, quite a bit of there's a lot of curiosity as to whether or not in an environment like this, index funds are the way to go.
Sure. So about the excessively valued companies, we were in a period just a few years back where trillions of dollars worth of bonds were trading at negative yields. Now, at such a time, any kind of story was flying in the private equity space as well as to some extent in the listed equity space, where people were not worrying about the current economics. They were buying into long-term market share growth stories, and there would be profitability maybe 10 years out, 15 years out. Now that interest rates are back to more or less normal levels, now if let's say dollar cost is 5% or 6%, then obviously people are not going to buy into very, very long drawn out decadal kind of stories. People will want some path to profitability. So I think that mean reversion in the startup space, in the loss making space, as well as some of the very highly valued companies, that is coming about. On the index funds, so for a while now, we have been seeing where because of the high expense ratios in the especially in the PE or those kind of space, or in the hedge fund kind of space, where people have not been able to beat a simple index fund. And there is, even in the active managed mutual fund space, in a lot of spaces, there has been a challenge in terms of beating the index. So people really need to pull their socks up. This is, I am talking about the asset managers. And for a new entrant into the market, someone who does not want to take the time and effort to find managers or fund houses which, in their estimate, will beat the index over the long run, for them, it's a very simple task. Invest regularly, invest in the index funds, and just forget about it. So I think that's very valid advice for a large section of the population.
Okay, fair enough. Let's get to talking a little bit about the sectoral bets as well, then, Rajeev, and what the outlook is when it comes to the entire financial sector. Apart from that, the fact that you also have the Berkshire AGM alluding to the fact that, a lot of those well-managed banks are great businesses. Apart from that, if we were to even expand that and look a little bit at some of the other sectors, maybe even export-led sectors, what would be the outlook there, say IT?
So one is, again, I'll allude a little bit to what was discussed in Berkshire. Berkshire usually does not give revenue or profit guidance, but this time it seemed like there was some sort of an exception where they said that 2023, the operating businesses could see profit drops because they are sitting on a lot of inventory. There would be, demand is weak, there may be a need for discounting stuff, and there would be revenue losses and profit losses as compared to the previous year. So the economic environment is clearly weak in the Western world. So at such a time, I think export-oriented sectors or the IT services could have a tough 6 to 9 month period. However, we have seen the prices coming off quite significantly. So someone who has a longer term outlook could look at selectively buying in this space, but the near term outlook looks difficult for these kind of companies.
Sure. Rajeev, just getting back to your own investment, strategy and play in the market right now. You talked about banks, but where else are you increasing or have already, increased exposure in the last 52 weeks?
So this has been in a space where traditionally we have not been investors. It's actually something different as to our regular investing style. This is in the space of the PSU and commodity kind of companies. So to my mind, the fall in the stock prices has been severe, and these companies have underperformed for a very, very long time. And on the flip side, what we are seeing is that from the government side, there is this renewed focus on value creation and privatization and capital efficiency. Some time back, there was this circular from the Gujarat government where the state PSUs had to mandatorily pay out a certain portion of profits and focus on buybacks and things like that. So we have seen the Air India privatization, a lot of things have been put out for privatization. So I think this is a space where there could be selectively opportunities to avail of. This space is very tricky. I'll grant that. Sometimes one may get stuck, but if one is careful about investing here, there could be opportunities.
Okay, fair enough. Give us a sense as well as to what the outlook is when it comes to the entire auto sector as well. Do you believe that it has been, a lot of the concerns now in terms of supply side pressures as well as the semiconductor shortage, etc., are now behind?
So auto is a interesting space given that because of various factors, one was a cyclical downturn, then the pollution control requirements were steep, which resulted in a lot of price increases. So the auto sales have been restricted for quite a while now. And even now, the overall numbers may not look that great if you just look at in terms of number of vehicles sold. But there has been a big shift towards buying bigger vehicles or buying pricier models or the top end variants. And this shift has been there from small cars to compact SUVs and SUV kind of things. And after a long time now, even demand seems to be reviving in a cyclical upturn. So this is a space I think you rightly mentioned to the semiconductor shortages and part shortages some time back. I think we are coming off that period and things are normalizing here. And this space has not done anything for a while now. And they look poised for better times ahead.
That's the view coming in on the entire auto space. And on that note, then, Rajeev, it's been good to have you on board. Thanks so much for taking time out, joining in, sharing with us your outlook on the markets.